So far on this financial journey that you are on, okay, as a young man, young woman, okay, it's been about 15 months now, and we are getting ready to get our first car. Whether we're going to lease or buy, that decision is up to you. If you're going to lease a simple vehicle, okay? You can even go a year back. So if we're in, if it's 2019 or 2018, 2025, okay, whenever, lease 1 year back, okay? You get a much cheaper vehicle. It's still brand new. Or you can do the year of and you get something like a Hyundai, a Toyota, a Civic, okay? And you lease that thing for like $200, all right? And c'est la vie. If you're gonna get a used car, or if you're gonna buy a car, get a used car. Okay, there's no sense in buying a brand new vehicle that you can't afford. If you can afford it, go right ahead. Hey, that's cool. No problem with that. But my thing is, if you're gonna buy it, make sure you can buy it twice. All right, like Jay-Z says. Okay, make sure you can buy it twice. Now, let's go over some numbers here to bring you in the loop. This is where you should be at in year 2 after doing everything we did before. Coming up to now, we're in year 2. We took 3 months to do our homework to find the right car using auto advisors. We're going to decide whether to lease or buy. In the same time frame, we're also going to acquire a unsecured line of credit. An unsecured line of credit, okay, or a personal unsecured line of credit is a revolving credit line. Okay, it's a two-way street. You are essentially getting money from the bank. Okay, the bank is willing to give you money without any collateral. Remember how we went from secured to unsecured? Okay, well, with this, you are getting this free money from the bank, so to speak, using your good credit. You're going to get this money from the bank, and they're going to allow you to use this money whenever you want. There's no restrictions. This is not a loan. So with a line of credit, it's revolving, meaning it's open door, it's a two-way street, open-ended. It's just there. It's not a credit card. It's just a line of credit with money sitting, waiting to be used whenever you need it. All right? The interest on that line of credit, on that debt that you will borrow from, is calculated daily. Okay? So if I have a $5,000 line of credit and I only use $2,500, I'm only going to get charged interest on the balance owed, $2,500, not the whole $5,000. With a loan, the bank gives you money and then you have to pay it back in the form of, a term, over a term, the life of the loan, whether it's like a 3-year, a 5-year, 10-year, whatever it is. Okay? Problem with those is the bank immediately gives you all the money up front. Now you have to pay interest on all that money. What if you don't need all that money right away? What if we only need 3, 4, 5 grand to get a car, right? 2,000-3,000 down, and then a couple months payment to buy you some time. All right. Another thing is there's no annual fees. There's no draw period, which saves you money. Okay. If I don't have to take the money out, I don't got to use it right then and there. Right. What if you get the line of credit in month 12 or month 13, but you don't actually get the car till the 15th month? Well, if you had a loan, you would get that money up front and now you'd be pressured to spend it or use it and then to start to repay it. Well, with a line of credit, you use it as you need it. Okay. So that's why we're going to get this. This is a step up from the credit card, okay? Now, let's say we have this. We have our auto advisor. We're getting ready to buy the car. Let's go over your numbers once more. You also have a credit card for at least $5 grand at this point. You're making $1,300 or $1,400 per month because we got that raise, remember? Our expenses continue. Keep it 600 to 700, 50%, or keep it at the original, right? 600 flat. If you want to go up to here, that's fine. You have room as long as you're living that 50% or under lifestyle. I promise you, you're going to get way, more intense amount of results. You're going to get amazing results, unlike everyone else that's living paycheck to paycheck. You're going to force yourself to live below your means at 50%, all right, for a temporary period of time so that you can live your entire existence how you please. But at first, it takes work. It takes dedication, discipline. It takes doing what no one is willing to do. When you do what no one is willing to do, you get to do what everybody wants to do. Let's go over your cash flow. Over the course of the 12 months, plus the 3, okay, so for 12 months, you should have anywhere from 6 to 8 grand built up in an account. Cash, savings, checking, wherever you decide to put it, as long as it's liquid, all right? You should also have another 3 months, right? Another 3 months of cash flow, right? Should give you another $1,500, okay? So we should have in the 15th month anywhere from 7.5K to 9.5, almost 10,000, all right? When we get this car, we're not going to use your money, okay? We're not going to use your cash. Very important. We are going to use the line of credit, all right? Whether we get a 3,000 or a 5,000, that's really all we need. You're going to get a cheap car or you're going to get a cheap lease. Either one. It's just to get you from A to B so that we can increase our income, save time, get more sleep, be more energized, be more active in whatever work you're in. Okay? Very, very important. All right? So let's say whatever amount we get, we use the line of credit money first. Okay? Which now you just incurred a debt. But instead of letting that debt sit and just pay the monthly payment, we're going to take this money, okay, this cash, a portion of it, not even all of it, just a portion of it. We're going to take it and we're going to dump it in that line of credit, okay? Then what you're going to do is these expenses right here, you're not going to use your money again. You're going to use the money that you put into the line of credit, and then you're going to extract the money to then pay bills. Okay? Pay your bills from that line of credit. If you want to be even more slick, to buy you a little bit more time and to avoid interest costs, you can take another step, okay? Which is, mind you, we took the line of credit first, we got the car, okay, we're happy. We take our cash flow, we put it in there, pays off the line of credit completely. I pay nothing or very little in interest costs, okay? Then you've got this credit card right here, my friend. You can continue to run your expenses through there, right? You can continue to run your expenses through there. When 30 days passes or less, or whenever the due date comes, the due date, when that arrives, you can just pull from the line of credit expenses, right? Whatever amount it was, pull from the line of credit, and then do the same exact thing. Use this cash that you had already to pay your bills and just put it in the line of credit, okay? Right back in the line of credit. And now you're done. No car, debt. You own the car outright. You're just paying a lease. If you're leasing, then your expenses go up maybe $200-300, okay? And then with insurance, okay, expenses are going to go up a little bit more. All right, so I'm going to factor that into the next video. All right, this is worth getting so that you can improve your way of life, okay, your activity. You can get out there more and we can have more time to do certain things that we can work on together. And I'm going to give you some ideas on what we can do, what we can work on to get us to that next level. Okay? Tune in.